The time of day that you take your trades is more important than you probably understand right now. See, there are different sessions in each day with different characteristics. If you understand these, you will know the good times and the bad times to take trades and avoid trades. You'll be able to catch more momentum, increase your probabilities, and ultimately increase the return that you make on your trades. So in this video, we're going deep into the relationship between time and price. I'm going to show you session characteristics and how you can utilize these to take some great trades. With that said, let's get into it. So different trading sessions have different characteristics that mean the market moves in predictable ways, dependent on the time of day. Now this, of course, as I've said, is only relevant to specific currency pairs. Other currency pairs are going to move in different ways, but what we're covering today is relevant for majors and quite a lot of minor pairs, so European, US, UK based currencies. So getting into the different characteristics then. The first, happening during the Asia Pacific session, is a consolidation, where the market doesn't achieve much except for just going sideways. The reason that this happens is because during the Asia Pacific session, which is generally the night time in the UK and a bit out of session for the US as well, there are not many Europe, US based currencies being traded at mass scale. Now, if we think about what happens in terms of when assets are traded, in the Asia Pacific session, which is daytime in Australia and various parts of Asia, the firms and institutions that are trading currencies are going to be focused on these Asia Pacific currencies. This means that without people trading things like the euro, the pound, and the US dollar at mass scale, these things here move quite slowly, but these things here have a bit more momentum. So when it comes to Asia Pacific, when we're looking at, of course, focusing on major pairs, we are generally going to see a consolidation. So we have the Asia consolidation or the Asia range. That's generally what we call this session characteristic, okay? During London Frankfurt session, which is early morning onwards in Europe and the UK, we start to see a bit of momentum kicking in for some of these major pairs. So things like the euro, the pound, and the US dollar, along with potentially the Canadian dollar and the Swiss franc, start to see a push in momentum. This means that we get what we call the London push. This is basically where the market finds its way out of its sideways range through Asia and pushes one way or the other with more significant momentum. So this London push creates the first major opportunity of the day for day traders, okay? If you're trading major pairs, including any of these different currencies that we've just covered, you are going to start to see more significant movements here during the London Frankfurt session for the London push than you would see during the Asia session. So London push is the next one to be aware of. Now the final session characteristic of the day is the New York session. During New York, we see momentum continue for these currencies: Euro, Pound, Dollar, CAD, and Swiss franc, okay? There's a few more that run pretty well here. We are still going to see momentum on AUD and NZD and JPY through both of these sessions, by the way. These just don't play into the characteristics as well, such as if you traded AUD JPY or NZD CAD, it's not really going to follow this same flow of Asia consolidation, London push, and then the final characteristic, which I'm covering now, which is the New York reversal. So during New York, we often see the market flip the other way. Meaning if the London push is bullish, into New York, we may see this market start reversing into bearish price action. Now, this isn't an everyday thing. You're going to see me go to charts and I'll show you how often these things happen. But it does happen often enough to be considered inside of your trading. And if you find a way to look for executions to trade against London into the start of New York, then obviously you'll see that this happens often enough for this to be a viable way to approach the markets. So breaking down the three session characteristics then, we have the Asia consolidation, which is simply where these currencies, these major currency pairs, are not being so actively traded during this frame of time, okay? We don't see big institutional buying and selling coming in during the Asia Pacific session for things like the euro, the pound, the dollar, the CAD, or the Swiss franc. So therefore, we see sideways price action for the most part during Asia Pacific. When London session opens and traders in Europe and the UK start to trade more actively, we get oftentimes this London push, which is the first big drive of momentum at the day. This will happen around 8 a.m., 9 a.m., 10 a.m. UK time, majority of days, not every day, as we'll discuss in a moment, which provides you opportunity to pretty much just catch the volume and catch the large movements that are taking place. And then into New York, we will often see that reversal occur as traders in the US and Canada come to the markets and start trading actively. So when they do this, that new shift in momentum, the slowdown in momentum from London, Frankfurt, Europe, UK traders, and the pickup in momentum from US and Canada-based traders can actually create a shift in the market dynamic and a shift in the market direction. Okay. Now, obviously, running through these sessions once again, where do we see the opportunities here? Well, for the most part, for a major pair trader, Asia, you're just not going to trade. Okay, this is out of session for most people. It will take place at night. So the best thing to do through Asia Pacific is just not trade. Through London, we are then looking for opportunity to catch momentum. So London is the first trading opportunity of the day on these major pairs. And New York, we will potentially be looking for that reversal. So this could be the second opportunity of the day. Now, there are many different ways to incorporate these systems and this process into your trading. You could look to be just a London session trader and look for that first momentum. You could look just to trade New York session and look for that reversal momentum. Or the one other thing that we need to discuss real quick is liquidity around the Asia range. So during the Asia Pacific session, when we create these kind of ranges of consolidation, the market's not really got any direction, we create liquidity above and below this range. Now, this liquidity is oftentimes swept out before the market makes its movements or kind of built in with the dynamics of the market that day. If we take a look at the markup I've done here, we see the Asia consolidation sees a sweep below and then a drive to the upside, and then a sweep above and then a drive to the downside. So actually, the range that's created during Asia is swept to the low and to the high, which creates additional understanding of what you could do in terms of actually trading this price action, right? Not only do you look for the London momentum, not only do you look for the New York momentum, but you can also use these Asia highs and Asia lows as validations and targets for trades. You could say if the market had failed to reach underneath the Asia range and you were looking to buy, you may want to wait for the sweep first to improve your odds of winning the trade. If we get the sweep, we have a better understanding that this is a good entry because it stops the risk of us actually getting in and then getting stopped out on the sweep. You could also then use your London push momentum to capture a run towards the high of the Asia range. So if the Asia range high was here, we could look for a buy up towards this level, and then we would look to close our trades when we get to the high of the Asia consolidation. So it makes for a very simple, easy, and clear target as well for any trades that we do take, right? Another thing would be if we saw the London push take place without sweeping the Asia low, for example, but we did sweep the high leading into New York session, well then the New York reversal could have a very simple and easy target of actually tackling the Asia low because it hasn't been swept yet. So understanding this Asia range liquidity and understanding that it's often swept both sides is also a very strong factor in understanding how to successfully use these session characteristics to your advantage. So we have the Asia consolidation, the London push, and the New York reversal. And what I'm going to do now is head to real charts and just run through a few different days so that you can see how this works in real time. Let's get to that. All right, so let's take a look at some of these examples on real charts. Now, before we get into it, understand that the blue box is Asia session, the green box is London session, and then this kind of very light gray, reddy color is New York session. So we're going to go through the real charts. We're not going to look at any potential trades just yet, but what we are going to do is just go through and show you the flow that we get throughout the different sessions. Now, the first characteristic we covered was the Asia consolidation. You can see that through Asia session, we pretty much just moved sideways. And the range that we created was quite a confined box. We have the high around here, and we have the low just here. So this is the Asia consolidation. Not much happens. During this time, you realistically just don't want to trade. Probably just go to bed. It's better than trying to trade through Asia session if you're looking at major pairs because you're not going to get any high volume movements. Now, when Asia session comes to a close, we then move into London. London session officially opens around here for the high volume timing, but we do start to see pretty much immediately after the close of Asia, we start to get that more significant momentum coming in. Now, in terms of the London push, you can see we have this initial rally, we have a slight pullback, and then we have a second rally through London. So London clearly chose its direction this day, and that was for upward movements. We see from pretty much the open of London here, we have a whole morning until midday of just bullish price action. So when London session starts to come to an end, we do see momentum dying out there. This is pretty much the end of day for institutional trading in the UK, for the most part, and the high volume stuff at least anyway, which then leads the market into losing its momentum. And when New York opens, we see that New York reversal that we've discussed, okay? So we have London push, New York reversal, and then of course at the start of the day, we have the Asia consolidation. Now, one thing to draw to your attention around the Asia consolidation is what did we see before the day's trading really kicked off? Down here, we saw that the low of the Asia session was swept. So we got that sweep of liquidity that we discussed previously. Up here, we got the sweep of the Asia high as well. So you can see the market took out both sides of the Asia range, which will not happen every day, but happens often enough for it to be a surefire consideration inside of your trading. Waiting for those sweeps or using highs and lows of the Asia range as liquidity as targets is a really good idea. So Asia consolidation, London push, New York reversal. Let's move along. Here we have a slightly more aggressive day's trading, but we still have the same characteristics. We have the Asia consolidation where the market doesn't really do anything except for move sideways, right? We create a high and a low. That is going to be liquidity around that range. And then in London, we sweep liquidity, so the same characteristic again. And then we have from there onwards, the London push coming in at the low here and running with high momentum all day, okay? So understanding there, as I've said, you can use that Asia liquidity to kind of wait on trades. If you see a trade that is potentially looking geared for buys, such as here, but we haven't swept the low or high of Asia range yet, but you can wait for that to happen before you start executing trades. That can increase the probability of winning because you're getting in after the sweeps. The London push drives us all the way up to this point, and once again, as you see, when London session ends, the high volume timing of London session ends around this point here, we pretty immediately see all of the momentum die in this market. And moving straight into New York, we come in with an initial break of structure and then a sell-off, which lasts for pretty much the remainder of the day. So Asia consolidation, London push after sweeping the Asia low, sweep the Asia high, end the London push when the London session high volume timing closes, and then New York, we reverse immediately into the start of that session. Okay, so that's 2 days there, 2 out of 2 that we've just seen, these characteristics playing out. Moving along to day 3, we have very similar price action here as well. This one was a bit faster moving in terms of how fast the cycles played out. So we have, first of all, the Asia consolidation. As you can see, this is a much tighter range than pretty much all of the others. We just move sideways throughout this session. The market pushes up and sweeps the high. This happens a little bit later in the day. So there is the potential for a London push driving to the upside. Then London just turns into a consolidation, which means the London push in this instance would be the bullish movement. And then leading out of the end of London session into the start of New York, we lose this bullish pressure. We break out of this consolidation and we start to move lower. So this one happened obviously at a faster time scale where London slowed down earlier than the previous 2 days and the New York reversal started earlier than the previous 2 days as well. But we still see the same characteristics, Asia low and Asia high being taken out, momentum into the open of London and momentum into New York. Next day then, here we have one that didn't play to the characteristics perfectly, but still provided some characteristics for opportunity. So we have the Asia session, which is this smaller box. We sweep the high of the Asia session here. Following that into London, we have the London push, which is bearish this day. So you have the Asia high and low swept. You have the London push. Those characteristics are very much in check. The only one we don't get this day is the reversal. So into the end of London session here, we didn't then see New York reverse. We just saw a significant sell-off already taking place. Now, one thing that can kind of hint to this, but isn't a surefire rule for every single trade, is the high and the low of Asia have already been swept.
So there may be less reasoning here for the market to come and attack the Asia high once again, right? It's already been swept out. There is less liquidity awaiting here for us to actually make the reversal. But you have to understand we are isolated when we're looking at these characteristics to day trading perspective. And we shouldn't always remain isolated to day trading because there is obviously larger market narrative. If the market is bearish, then it doesn't always have to create a reaction or reversal to the upside, right? If the higher time frame suggests the market will be moving down, then that can still happen, okay? For sure. It doesn't need to be playing into the characteristics perfectly every day, and the high time frame narrative will always play a role. So this day we get the Asia, we get the high, the low, the sweeps on that, we get the London push, but we do not get a New York reversal. Let's look at one more day, and then we'll actually look at some trading examples of different Asia ranges, London pushes, and New York reversals. So this day we get some of the characteristics as well. We have the Asia consolidation as a tight range. Opening into London, we have the London push, pretty clear trending direction during London today. And then when the market slows down, we get consolidation into a New York reversal, moving to the downside, attacking the low of the London session down here, okay? We don't get the Asia low and high sweep today. We pushed above the high, but we never came back down to the low. So as we say, obviously, as with everything in trading, this is probabilities based, okay? You should probably expect these characteristics to play out 60% of the time. I've never really checked a whole long term, but I've traded these a lot. You can skip through the charts and see for yourself. I reckon it's probably going to be around 60% of the time that we see these characteristics playing out quite well, right? We've looked at a few opportunities. We've only seen 2 days out of around 6 here. The characteristics haven't perfectly played, but they have still provided some of the opportunities that would allow you to obviously catch that London momentum in pretty much every opportunity. And also, obviously, tackling highs and lows of the Asia range has worked in every single day except this one as well. Here's another one too. Asia consolidation, London push, New York reversal. We don't sweep the low of the range here. That's fine. We still get the solid characteristics of picking up momentum into London session for buys. And then as soon as London ends, we get that momentum shift into sells for New York. So we get the London session and the New York session as perfectly tradable opportunities here. So that's all the ones we're going to look at. Now let's look at some individual trade opportunities. So I show you how you could potentially approach these different characteristics to take real trades. All right, so we're going to take a look at an example of how we can trade some of these session characteristics. We're going to look at this Asia and London session for now. So we're looking at a trade into the open of London session. Now, the first thing we want to do is consider the liquidity above and below the Asia range. So we can see just into the close of Asia, we saw the market push underneath the Asia low. We haven't yet taken out the Asia high. So this is still a potential target. We could potentially look at seeing the market reach in towards this level. Now, if we consider the London push characteristic, look what we've just seen here with this big bullish candle. As London starts to pick up and starts to take off around 8 a.m. UK time, we saw a huge drive to the upside, which has actually pushed us above a previous structural high. So we had the lower low, lower high formation kind of consolidating throughout most of Asia. Asia closed and we saw the market push underneath the low. So we have this Asia liquidity pretty much ticked off. That's now been swept. Into the open of London session, we saw this huge bullish candle here, this blue one, closing with strong momentum and breaking structure inside of the internal range from Asia. Now, with all of this aligned, we could safely assume that the market is now moving bullish. And because we can move with the momentum of the London session and catching that London push, we could now potentially consider a pullback, retest of this area of imbalanced demand, which is going to be realistically this indecision candle here, right? But I'm just covering the wick as well down there, just because obviously we want to make sure the stop is under the low. And then we could look to target potentially the Asia high with possible extensions even higher. So a trade idea that we could go for could potentially look like this. Now this risk reward is not too great for me. What I can do as well, considering we're expecting the London push to continue further with strong momentum today, is potentially extend targets upwards. So you don't have to trade in a confined manner between Asia high, Asia low, and just in that day's range, right? As we've shown from all the examples, what we generally do is create the Asia consolidation where we move sideways, and then we expand one way, and then we expand the other.
So we don't have to just trade inside of this consolidation. We anticipate the market is likely to go above or below this area. So Asia high could be kept in mind for a target, but if we want to extend the risk reward and we want to make the most of this trade, we could look to take the market up towards this pretty clear and balanced supply. So once again, just showing you that the characteristics are to be used as additional confluences or kind of context builders around larger pictures. It doesn't all have to be confined to that day's current trading range. So this would be a pretty simple setup based on the session characteristics. We're going to run it forward now, see how this one plays out. At this point, pretty immediately after the next 15-minute candle, the trade was tapped in. Spent about an hour consolidating there. And then as you can see, the London push leads us all the way up to that target. So as you can see, we've got a 3.42% potential return trade here, which has been locked in pretty much a short period of time. Let's take a look from start to finish throughout London session. This took 2 hours exactly to go from entry to target. Now think about the context and simplicity behind this trade. We saw the Asia low swept out. We then saw momentum pick up and break structure. This momentum pickup here is basically the first indicator that the market is likely to lead into that London push. Because we've swept the liquidity below, we don't see too much reason for the market to go lower. So when we close with a big bullish candle like the blue one here that indicates the start of the move, this is a good indication that we can just continue buying this movement because our London push is likely to be bullish. We have extra confluence that the market is highly likely to come and take out the Asia high. And then we just work with the larger confluences as well, okay? So that's a rundown as to how we could approach the London push and Asia consolidation kind of characteristics to take a nice little day trade there. Simple stuff, but quite repeatable and will happen quite a lot of the time for you to get trades out of it. Now, obviously, it's not going to win every time. Nothing in trading does. But with this risk reward, you only need to win around 4 out of 10 trades to be profitable. And obviously, you're likely to do more than that as well, between say 5 and 6 trades due to how regularly these characteristics play out. So now for the New York reversal characteristic, we would just wait until the start of New York session, the end of London session, see where the market is and if there was any opportunity for us to then potentially trade one way or the other using that specific characteristic. So at the moment, we're still trading through London. It's just about coming to a close here. We've seen a big push to the upside at this point. Obviously, nothing confirming reversals means that we shouldn't be looking to trade into reversals. If we take a look at this market, we can see we are quite clearly in a downtrend as of right now. We're going to see if there's any meaningful areas of supply that we could potentially look at selling from if we are going to be leading into a New York reversal come the open of New York session. So there's this area of supply which has been taken out. There's this little area of supply up here, this blue candle, last candle before the impulse. As we can see, if we zoom in on that real quick, the range behind this is efficient. So this would be a meaningful area to potentially consider reversals. If we mark out the low of this candle, which is going to be this here. So I use the last candle before the impulse. The supply zone for me for reference is going to be this blue candle. But I always clear the wick if there's one following, just to make sure that my stop is going over the high. So we can see here that we do indeed have imbalance or inefficiency. This supply zone hasn't yet been retested. So there'd be opportunity for us to then look for shorts in line with the larger trend from inside of this area of supply, okay? Now, ideally for me, I'd want to see confirmations in order to make that happen. Perhaps now we go down to, say, the 5-minute time frame and see if we can get some structural shifts. Okay, so we have started to see the market losing strength, but we haven't yet had a fully validating closure. This would be a confirmation as to whether we're going to get the reversal back in or not, is of course to be decided. Let's take a look at the 10-minute time frame, nice simple area to go for then. If we were to get a short, for me, I would be placing my short orders on this area. So we have that lower time frame break. We have this nice clear 10-minute supply. Stop above the high, entry on the zone. And for the sake of a target, we're going to look at the swing low, right? Because the market's in a downtrend. So if we're taking a trade here, we obviously want to attack a swing low. So this would be kind of a hypothetical trade. Obviously, we need to see if it would get tapped in. Looks like it potentially wouldn't on this second position. So although it did set up, I personally, in my way of trading, would have missed this second position. But that's not to say that's going to happen every day. All we missed was the pullback that oftentimes will occur. But you can see that even then, with this missed trade, if you'd have taken it from the sell, would have been all good, whatever.
But even then, we still do get that characteristic of the New York session kicking off a reversal, okay? So there we go. That is how you would trade these session characteristics in real time. We got one nice trade here in the London session, and then we missed an opportunity, but we did see those characteristics playing quite nicely. And a lot of the times these setups will provide entries for you. So it's just the nature of the game. I'm not going to hit every single one, but you can see how nicely pairing these three characteristics together, Asia consolidation and liquidity, London push and New York reversal, can provide some great opportunities. So thank you for watching. I hope you've learned a thing or two in today's video. Now you understand how important timing is in taking great trades. And if you're a day trader, this information is invaluable. If you want to build all of this information into a system, check out the top link in the description. That is a free trading course called 7 Steps to Profitable Trades, where I will help you to build a trading strategy for yourself so that you too can build consistency and start taking great trades at the right time of day in the right sessions. Check that out. Thank you for watching, and I'll see you in the next class.